Hello, ladies and gentlemen. Good morning to you and happy Monday to everyone in the house. I hope we all had a wonderful weekend. Let's quickly confirm we're all on the same page. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get the party started. So I want to see some confirmations in the comment section, so let's know that we're all on the same page here. Let me see what's going on in the chat. Okay. So I need some response, please. If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section. So let's be sure, let's be certain that we're all on the same page so that we are not going to be okay. Okay, 359, good morning to you. Trust you had a wonderful weekend. All right, so we have 696 in the house too as well. Good morning to you. Mori Yasmin, good morning. Polik79, good morning to you. PJ Dadu, I hope I pronounced that appropriately. Good morning. And here we have Carrie in the house finally. Good morning, Carrie. How are you doing today? All right. Okay, 359. Okay, glad to hear that you're doing good. 379, good morning. All right. Thank you, Carrie, for that confirmation. Okay, so I want to assume that we're all on the same page. My screen can be seen clearly and my voice can be heard perfectly well. So we are good to go at this point. So I want to welcome you all to another promising session on Extra and Speed Live, hosted by my humble self, Sharif Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities that we could take advantage of during the New York session today. Well, today it's a very sensitive and peculiar day, and the reason is simply because one, today is going to be the last trading day of the week, and also it's going to be the first trading day of the week as well. And being the last trading day of the month, we want to be looking at the current structures in the market. We want to be very sensitive enough to see how participants in the market are going to be relating with particular structures in the market. So, as usual, on Monday mornings like this, we are going to be looking at random pairs. We are going to be deliberating on the pairs and looking out for trading opportunities on the pairs for the week, after which the subsequent days we are going to be monitoring whatever pairs we have chosen today. And for those who are in the on the live session right now, if you have any pair you want us to look at, this is the best time to throw it in the comment section so that I can incorporate it into my plans for today. And you know that once we have incorporated to our plans for today, it's going to be part of the pairs we are going to be monitoring throughout the week. So if you have any cryptocurrency, any options, any stocks, currency pairs you want us to look at, commodity, whatsoever it is you want us to look at, feel free to drop it in the comment section and I will try to include it into my plans for today. So without further ado, let's dive into the chart and let's see what is going on the market. Well, I have like 5 to 6 pairs which I shared on my TradingView platform that I want us to be looking at today. And if there are any pairs I can see in the chat section, I will try to include it to our schedule for today. So let's dive into the chart. And as usual, the first pair we are going to be looking at is the US oil. And on the US oil, let's see what is happening. Remember, the US oil was a pair that gave us over 200 pips for last week. We took advantage of a bullish momentum last week that broke out of the very important $86 level as price continued to climb to the upside. So for those who are not part of our live session last week, so it's appropriate that I take an holistic view right now. Let's all see what is going on the daily time frame, after which we are going to be using the structure we identify here to take trading opportunity for the week. Now, the first thing we observe on the daily time frame, like I've always been saying, is that price action has been on a strong bullish momentum. And since the beginning of the year, price has consistently found uniform higher lows, and as a result of this, we were able to connect the series together to give us that bullish trend line that price has been respecting. So in addition to the current structure we have here is the key level at the $86 mark. And if we look at how the structure here has been playing out in the last 1 year, we can see that this level at the $86 mark has been a major determinant of price action. Look at what happened here during the later part of last year. We saw how selling momentum took over the market there until then at the beginning of the year, we saw a breakout retest of that structure to signal a bullish momentum. And if we fast forward into the month of August, we saw how that same level has been a buying niche for participants in this market. And in the month of September, we saw selling pressure which pushed price right below that level. And throughout the month of September, price was trading right below the $86 mark. However, during the early days of this month, that is the month of October, we saw a breakout of that key level, which also shares a confluence with that bearish trend line, and this was as a result of the decision the OPEC Plus made. And following that, we saw price crashed back again to fall below the $86 mark. However, during the course of last week trading session, we saw a final breakout of the $86 level to signal a possible initiation of the second wave of the bullish momentum that started 3 weeks ago. So now with the current information I was able to share here, you will all agree with me that the $86 level has been a major determinant of price action. Now that we have this structure identified, what is going to be our plans for the week? Well, before going into the details of what our plans is going to be like for this week, well, we need to take into consideration the significant breakout of the $86 mark. And if we are going to be taking that into consideration, definitely whenever we have a breakout of a structure, we expect that price is likely going to come back to do a retest of that structure, which in such a way that we start having buying pressure around this area on lower time frame to join the trend continuation to the upside. And towards the end of last week's trading session, we started seeing bearish momentum here, which I'm going to be calling the retracement of that previous impulse leg. So how far will this retracement phase go is what we are going to be looking at on lower time frame. So we want to see how far this retracement phase is going to go. Are we going to be having buying pressure right above the $86 level, which also shares a confluence with that bullish trend line that we identified earlier. So in order to have a better perspective into what's going on in the market right now, we need to scale down to a much lower time frame where we want to see how participants in this market are actually relating with the current structure. So when we scale down to the 1 hour time frame, what is the first thing we observed on the 1 hour time frame? Well, looking at the current structure we have here, hold on a second, let me delete this. So looking at the current structure we have here, we can see that since the beginning of the week, price has been consolidating right within the $88 level. As you can see here, this is the highest point price got to at the beginning of the week, the $88 level. And then we saw price break down the $87 area, which was a very significant support level, which we identified last week. And since then, price has been trading right below the $87 mark. So what this simply tells us that is that the week has started on a very strong bearish tone. Now, if we zoom out and see what has been happening since last week, remember we had this impulsive move which we took advantage of. And as soon as price got into the $89.20 level, we started seeing selling pressure around that area. But there is a very important structure here that I was able to identify, which looks more like a reversal pattern in the form of a head and shoulder pattern. So we have the left shoulder here, we have the head here. then we have the right shoulder around this point, and then we had the breakdown of the $87 mark during the course of the early hours of today. So at this point, the $87 mark appears to be the neckline of that reversal pattern, and right now we already have the breakdown retest of the $87 mark, giving us a confirmed reversal pattern. So now, remember I showed you on the daily time frame that the selling momentum we've been witnessing since the later part of last week, for me, is looking more like a retracement of that impulse leg. So how far will this retracement phase go is what we don't know. And in order to project an area we want to be looking forward to for the culmination of that retracement phase, what we need to do here is to take into consideration this impulsive move, hereby running our Fibonacci retracement tool through the impulse leg here to aim at somewhere between the 50 and the 78.6% of the previous impulse leg. So I actually had two impulse leg. The first one is this one from the $83 mark here, and then the second one is from the $84 area. So when I was able to do the two together, I was able to find the buy zone right within the $86.50 level and the $84 area as an area we want to be looking for buying opportunity. And so because of that, we were able to label this area, the structure around this level, and then we want to be looking forward to price coming into this area, evolving into a reversal pattern. It could be a reversal pattern, it could be buying pressure on lower time frame, it could be your double bottom, your inverse head and shoulder pattern. Most importantly, breakout retest to structure to join the rally to the upside. So on the US oil right now, we want to be patient enough to see how far this retracement phase is going to go. So we've already identified a buy zone here, which also lines up with the $86 level. And remember, this $86 level was broken during the course of last week trading session. And from a technical standpoint, whenever we have a breakout of a structure like this, we expect that price is likely going to come back to do a retest to structure, followed by buying pressure on lower time frame. Then we could join the trend continuation to the upside. So we are going to remain patient here. Let's see how far this retracement phase is going to go. And for those who are taking advantage of this counter trend, that is the breakdown of the $87 level, retest of the structure, well, kudos to you for taking advantage of that. Right now, price is on that $86 level. Remember, this is the very important key level we identified on the daily time frame. So I will be advising those who took this counter trend at the breakdown retest of the $87 level to move your stop loss accordingly to either protect your position, move your stop loss to a desired profit target, profit area, or move your stop loss to break even so that you can protect your position against any sudden pullback that is likely to come at this point. So we are at a very critical level here. We are right around the key level at the $6 mark. So we want to see how price action is going to relate to this current structure, after which we are going to be making a decision. So what are the things we are looking forward to? One, we're looking forward to buying pressure around this area. That is one on lower time frame to incite a trend continuation to the upside. And if price breaks down the $86 level, then we want to be looking forward to a situation where price forms a reversal pattern here. It could be a inverse head and shoulder pattern, breakout retest of structure on lower time frame, then we could actually join the trend continuation to the upside. So this is how we want to be looking at the US oil for this week. And if you have any questions or you need further clarification regarding what I have just discussed now, feel free to drop in your inquiries in the comment section of this video. So I will be taking the next 10 to 15 seconds to read through the charts to see if there are any questions before I move on to the next pair. Okay, so in the absence of no question, I want to assume that we all understand what I've just explained so far. So let's move on to the next pair. And the next pair we are going to be looking at is the US tech as usual. Okay, so let's go on to take the US tech. And remember what our setup was like on Friday on the US tech during our live session. where we identified this $11,050 level. And remember, we identified a buy zone here, and we said if a breakout retest of the $11,050 level happens on Friday, we want to be taking advantage of a bullish momentum. And this is exactly what happened as price climbed all the way into the $11,600 area with over 450 pips to catch there. So for those who took advantage of this move at the end of last week trading session, kudos to you for being on standby to be able to take advantage of that trading opportunity that the market presented to us. Now we are at a very critical level at this point. So if you are still in that trade, that is the US tech, taking advantage of the move right above the $11,050 level, if you are still in that trade, I will be advising you to move your stop loss to somewhere around the $11,400 area. As we can see, the situation we have here is looking more like a consolidation phase that might lead to a retracement of that previous impulse leg that we just identified earlier. So before we go into the details of how we're going to be trading the US tech for today, the first thing I'll be doing here is to scale up to the higher time frame so that we can have an holistic perspective into what is really going on in the market right now, after which we are going to be making a decision on what next to do on the US tech. So the first thing I'll do here, let me delete all this so that we can have a clean chart. So I think all these ones, okay, this one is still relevant at this point. 11,250 level is still relevant, so we don't need this anymore. And okay, so looking at the current structure we have here on the daily time frame, we can see that price action has been on a bearish turn since the beginning of the year. And if we connect the series of lower highs here, we were able to identify this resultant bearish trend line, which has been guiding bearish momentum since the beginning of the year. So there is a structure here that makes this current structure very important and also negating that selling pressure we've identified earlier, and that is the $11,000 mark. So look at what happened here as soon as price got here. All attempts by the sellers to push price right below the 11,000 mark was met with strong resistance from the buyers to push price to the upside. The same thing happened in the month of September. I think the later part of the month of September stroke the early days of the month of October, we saw buying pressure from that same area. So this is more or less telling us that buyers are very strong around the $11,000 mark. It shows us that the participants in this market are finding the $11,000 mark cheap enough to take advantage of buying the US tech. Now, and I told you something last week. I said I wouldn't be thinking of selling the US tech unless I see a significant breakdown of that demand zone. Remember, this demand zone has been holding price action for the past 3 to 4 months now. So I want to see a bearish signal where price takes out all the buy position here to give us a bearish signal. Then we want to be looking at a retest to structure to join the decline to the downside. And if this does not happen, I continue to look forward to buying opportunity. So going into the New York session today, what is the thing we want to be looking out for? So well, what I want to be saying right now is that we want to be looking at what is really happening around this area, and let's use the structure here on the lower time frame to decipher what our next move is going to be. At the same time, we want to see how participants in this market is relating to the current structure at the beginning of this week to determine how we want to be trading the US tech. So in order to do that, we will scale down to the 1 hour time frame so that we can see what has been happening since the beginning of the week. Now, scaling down to the 1 hour time frame, the first thing we observe here is that price action has been within a consolidation phase right within the $11,550 level and the 11,475 level. So one thing I want to do here is to identify those structure by highlighting the resistance and support level of this channel. So this is what we have here. So we have the 11,000, let me label them for the sake of clarity. So we have the $11,550 level right here. Let me give this 12. So we have the 11,550, and then we have the support level here at the 11,475, I guess. So 11,475. So let me place it at the bottom right hand side of our screen. So we have this. So at the beginning of the week, this is the first thing we observed here. There is an indecision in the market following that impulsive move last week. So we have a situation where price has been caught within a flat channel. And though we had a little breakdown of the $11,475 level during the early hours of today, but we are not sure if this is going to turn out to be a bearish signal, but we need to be very patient here. Now, taking into consideration this impulsive move to the upside, what we want to be doing right now, we all understand that after an impulsive move like this, we expect that price might likely go into a retracement, which could be a reflection of profit taking, especially for those who took advantage of the move right from this area. So there will be tendencies that people will want to do some sellings to take some profit out of the market, at least to lock in their position at this point, and this could result into a retracement phase back into our golden zone area. So how far this retracement phase is going to go is what we don't know, but we can actually project one by using our Fibonacci retracement tool. If we run it through the previous impulse leg here, and we aim at somewhere within the 50 and the 78.6% of that impulse leg as an area to look forward to where that retracement phase will end. So let me label this for the sake of clarity. So we have this labeled, and we give it a yellow color. All right, so we have buy zone around this area. So what I'm simply saying at this point is that considering the fact that price has been caught within a consolidation phase here, this could turn out to be a retracement if a breakdown retest of the 11,475 level happens. And if that happens and we see a situation where price breaks down, retest to the structure, then we want to be looking forward to price coming into somewhere around here, after which we are going to be looking forward to buying pressure on lower time frame to join the trend continuation to the upside. So hold on a second, let me show you the structure here. So we have the 11,250 level, which has been our yardstick since last week. So let's see how this is going to go out. So there are three scenarios here. The first one is price coming back into this bullish trend line, which has been holding price action for quite a while now. So if price comes into that bullish trend line and we start seeing buying pressure from this area on lower time frame, then we want to be joining a trend continuation to the upside. However, if a breakdown happens and price comes to as far as the 11,250 or comes into this trend line here, we will look out for buying pressure around this area as well, like a double bottom structure, or look down to your lower time frame, look out for buying pressure, and you can actually join the trend continuation to the upside from there. So we want to be patient here. And if you're a counter trend trader and you like taking counter trend opportunities, or you're a scalper, well, I will be advising that if we have a significant breakdown of the 11,475 level, price comes back to do a retest to structure, followed by selling pressure right below the 11,475, you could actually take advantage of a sell opportunity from that level, with your take profit target sitting somewhere around the buy zone here, where I said we are going to be looking forward to buying opportunity. But if you are not comfortable taking this kind of positions, that is counter trend opportunities, then I will advise you to remain patient for price to come within this level. Then we want to be looking for buying opportunity from that area. Now, the other scenario I want to be looking forward to at this point is a breakout of the $11,550 level. So if a breakout happens, that is price does not go below the 11,475, and we at any point in time we saw a breakout of the 11,550, then I want to be seeing this as a bullish signal. And whenever we see a bullish signal like this, remember, we are not getting too excited. We want to wait for further confirmation, which is likely going to come in the form of a retest of structure. So if a retest of structure happens followed by buying pressure on lower time frame, then we could actually join the trend continuation to the upside. So these are the scenarios we are looking forward to on the US tech. If you have any question whatsoever, feel free to drop in your inquiries in the comment section. So on the US tech, we are going to remain patient. We are still waiting for that signal to happen, and we already have a channel right within the 11,550 and 11,475 area, waiting for a signal to happen in the form of a breakdown or a breakout of that structure to give us a clue of where price will be heading. So that is that on the US tech. And I want us to move on to the next pair, which is going to be currency pairs. But before we go into the currency pairs, I want to share with you what I was able to spool out from the economic calendar. And we have quite a lot of high important events coming up this week, which is likely going to be affecting price movement on most of the major pairs we are going to be looking at this morning. So diving into the economic calendar, what we can see here? We can see, well, I have something on the euro that we are going to be looking at today. So we can see we have the gross domestic product that has come up this morning, and it was even. We really didn't have any significant deviation on this. And then we have the HICP, which was quite positive for the euro. And then on Tuesday, we are going to be having the ISM manufacturing PMI, which is a very high event too. And on Wednesday, we have the ADP employment change, we have the Fed interest rate decision, we have the Fed monetary policy statement, and we have the FOMC. All these events here are very high impact events and are likely going to be serving as a catalyst for price movement for the week. Then on Thursday, we have the GPP event, we have the interest rate decision, the MPC vote rate cuts, vote rate hike, vote rate unchanged. Then we have the monetary policy summary for the GBP as well. And then the Bank of England governor is going to also have a speech on Thursday too as well. And then on Friday, we have the almighty non-farm payroll coming up as well. So these are major events coming up for this week. So what we are going to be doing here is to make sure we prepare ourselves in such a way that we get ourselves ready for this sudden spike that is likely going to be happening prior to this event or after this event. So let's dive into the currency pairs that we are going to be looking at for the week. Well, the first one I want to be sharing with you is the USDJPY, which I took advantage of this morning. And right now I'm in profit already. And for those who actually took advantage of that move, kudos to you for being on standby to take advantage of this, as currently I'm in about 70 pips in profit at this point. So how did I get to this point? How did I start thinking of buying the USDJPY? And let's see if the market is going to present another opportunity for those who missed out on this trade to take advantage of. So going into the higher time frame, what is the first thing we observed on the daily time frame? Well, remember we've been monitoring the USDJPY since for a month now, and we all understand that the USDJPY has been on a very strong bullish momentum since the beginning of the year, and we were able to connect a series of higher lows here to give us that resultant bullish trend line, as you can see on your screen. However, there is a structure here that is very interesting at this point in time, which is very significant for trading opportunities for this week. And the structure is right around the 145 Japanese yen level. Remember, during the course of the month of September, we saw how this level was serving as a strong selling niche for participants in this market, as every attempt by the buyers to push price right above the 145 Japanese yen level has been met with strong resistance from the sellers. However, during the first week of the month of September, we finally witnessed the sudden breakout of the 145 Japanese yen level. Remember, we actually took advantage of this move, and we continue to stack our position as price climbed to as far as the 152 Japanese yen level before we saw this huge crash that took price right back to do a retest of that structure, which lines up with our technical perspective, as that is, whenever we sight a breakout of a structure, we expect that price will come back at one point in time to do a retest of structure to confirm price is moving in the prior leading price action. So in the situation we have here right now, we saw our price climbed up, come back to do multiple retests of the 145 Japanese yen level in the last week trading session to incite to give us a clue into the strength of the buyers at this point in the market. So what we needed to do at this point is to see what is really happening around this level, that is around the buying pressure here, to look out for trading opportunity on our lower time frame. So in order to do that, we will need to scale down to a much lower time frame, and we scale down to let's go down to the 4 hours time frame. Let's see what is happening on the 4 hours time frame. So on the 4 hours time frame, I was able to identify a reversal pattern here. Hold on a second, I will show you that in a moment. So we saw this impulsive move to the downside. We saw this bearish move. And as soon as price got into the 145 Japanese yen level, which I identified on the higher time frame, we saw multiple rejection. Price continue to find higher lows, evolving into a reversal pattern around that level. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, as it's going to be serving as our yardstick for trading activity. And during the later part of last week's trading session, we witnessed the significant breakout of the neckline here to give us a confirmed reversal pattern. And since the breakout of that structure happened, whenever we have a breakout of structure, obviously we expect that price might likely come back to do a retest of that structure at one point in time to incite a trend continuation to the upside. But at this point, we don't have that situation right now, as price is yet to come back and do a retest of structure. But one thing we needed to do was to understand how participants in this market is relating to this current structure here to decipher what is the next move we need to take on this one. So in order to do that, we needed to scale down to a much lower time frame, like the 1 hour time frame, to see how participants in this market are actually relating to the current structure we have here on the USDJPY. So when we scale down to the 1 hour time frame, the first thing we observe here is that price was caught within a consolidation phase at the beginning of the week, and as we saw, price caught within the 147.800 area and the 147.400 area. And one thing I shared with my team on the TradingView platform is that we are going to be waiting for a signal in the form of either a breakout or breakdown of this channel to give us a signal of where price will be going. So we could either have a breakdown of the structure, that is the 147.400 retest, to send price to the downside, or we could have a breakout of that channel at the 147.800 area, retest of that structure to join the rally to the upside. And this is exactly what happened as we witnessed the breakout of that structure during the early hours of today, and we remained patient to wait for price to give us a retest of structure. And in fact, we had multiple rejection of that level, giving us buying pressure on lower time frame and giving us a leverage to actually join that rally to the upside. So right now, price is moving in our favor with over 70 pips in profit. For those who took advantage of that move, kudos to you for being on standby to take advantage of that move. And one thing I'll be advising you to do right now is to move your stop loss to lock in some profit, or move your stop loss to break even to protect your position against any sudden pullback that might happen here. Now, the next thing we want to be looking at is, for those who had missed out on this opportunity here, is the market going to present to us a second chance to join this trend continuation to the upside? So what we want to be doing here is to identify structures here, and I will be bringing out my line chart here to give us a specific point to connect. And when we bring out our line chart, we can see that we have a structure right around the 148.250 level, which falls around here. So I will be lining that out and then labeling it for the sake of clarity, so that we can have a better perspective into what we are talking about here. So we have the 147.500, I guess. Let me check that out again. So we have the 140, oh, is 148.250. All right, so let me readjust that. So we have the 148.250 level. So that has been marked out right now. Let's go back to our candle chart. So we have a breakout of that structure, which is a signal that buyers are getting stronger at this point in the market. So what I'll be advising those who missed out on this opportunity is that we want to be patient enough to see if the market is going to be giving us a second chance in the form of a retest of the structure, after which we look out for buying pressure on lower time frame to join the trend continuation to the upside. So that is what we are going to be looking forward to, especially for those who missed out on this trade. Now, to make our job a little more easier, I want to identify a trend line that we shall be using to guide our trading activities for this week. So when I bring out my line chart here, what I was able to identify is the structure here. So let's mark that out. And I will be giving this okay, let me do this. So I will be giving this a lighter pixel. And let's give it a dash dotted line. So we are going to be using this as our yardstick for trading opportunities for this week. So as long as price continue to stay right above this bullish trend line, we continue to look for buying opportunities. And if price breaks down, then we want to be seeing that as a signal that there is going to be a momentum shift. Now, like I said earlier, we want to be waiting for price to come back to do a retest of structure. It could be the retest of the 148.250 level. And if we look closely, we can see that this level also shares a confluence with that bearish trend, that bullish trend line. So let's wait and see if the market will present us with a second chance. Then we could take advantage of that move to the upside. So that is that on the USDJPY. If you have any questions, feel free to drop in your inquiries in the comment section. And while looking into the comment section, I can see that Innocent Babe is in the house. Good morning to you, Innocent Babe. How are you doing today? And I hope you had a wonderful weekend. Then we have 9871. Good morning. How are you? And how was your weekend? Colleague 79. Good morning. Andre. Then Sophie 463. Rim Vase. Good morning to you all. So glad to have you around. I hope you had a good weekend. So let's see what we are going to be looking at on the next pair. Okay, Innocent Babe, having network problems, so I'm always not stable on. Okay, I'm good up here. All right, it's okay. I hope your network is good now, and I am good, and I'm glad you had a wonderful time. So moving on, the next pair we are going to be looking at is the gold. All right, let's look at the gold. And what do we have on the gold? Well, I have a structure. I already have a situation running on the gold as at this morning. I took advantage of a bearish momentum after sighting the breakout of the $1,640 level. So we saw the breakout of this level during the early hours of today, and I took advantage of that retest to structure on lower time frame, and price is currently running in profit at this point. But we cannot ignore the possibility of bullish momentum coming in at this point. And remember, we took advantage of this bearish momentum since last week from around the $1,660 level. So if you are still in that trend since last week, well, I will be advising you to move your stop loss to somewhere right above the 1,645 Japanese yen level. And for those who actually took advantage of the breakdown 1,640 level, I will be advising you to move your stop loss to break even to protect your position while we move on to the higher time frame, and let's see what we have from an holistic perspective before we come back down here to make a decision for the week. Now, scaling up to the daily time frame, the first thing we observed on the daily time frame, hold on a second, let me show you. So the first thing we observe on the daily time frame is that price action has been on a strong bearish momentum since the beginning of the year, and as a result of that, we had this bearish trend line figured out after connecting the series of higher lows here to give us that resultant bearish trend line. And we can see what happened during the course of last week's trading session. As soon as price tested that bearish trend line, we started seeing reversal pattern around that area. So besides the bearish trend line I was able to identify here is the key level at the $1,680 level. This level is in fact a very strong determinant of price action. As we can see, every time price comes within that level, participants in this market gather within this area to either buy or sell the gold. So we can see what happened here in the month of July. We saw buying pressure from that area. The same thing happened in the month of September, though we saw how buyers made an attempt to push price to the upside, but this was met with strong resistance from the sellers, hereby pushing price to break down the $1,680 level. And throughout the month of September, price has been trading right below that structure. Though we had the breakout of that level during the early days of the month of October, but as soon as price came back into that bearish trend line, we saw bearish momentum which pushed price again right below the $1,680 level. And since the beginning of this month, price has continued to trade right below the $1,680 level. And what this simply tells us is that sellers are very strong in this market, especially if we look to as far as the month of July. We can see how sellers has continued to hold the gold price below the $1,680 level. So with that being said, on this one, we also need to take into consideration this demand zone here at the $1,620 level. In as much as we have been having bearish pressure since the beginning of the year, in fact, in the last couple of months now, we've been having selling pressure. We can see that the $1,620 level has been holding sellers to ransom. Every time sellers comes within this level, we can see buying pressure from this area. The same thing happened a couple of weeks ago, which led into that engulfing candle that took price right out of that structure. So what this tells us is that the demand zone here has been holding buying pressure, and sellers are still finding it very difficult to break through this level. So is this going to be something that will continue this week, that we continue to see attempts by the sellers to push price right below the demand zone, or will the buyers take over and push price to break out of that bearish trend line? So these are the two scenarios we want to be looking at for this week. So in order to do that, we want to scale down to lower time frame, like the 1 hour time frame, to see how participants in this market are relating to this current structure at the beginning of this week. So in order to do that, we'll scale down to a 1 hour time frame. And on the 1 hour time frame, what do we have? So at the beginning of the week, that is during the early hours of today, we noticed how price has been trading right above the $1,640 level. Remember, this level was that same place we took advantage of this bullish momentum last week. Remember, we took advantage of this bullish momentum where we scooped over 3,000 pips in profit before we saw this bearish turn, and we took advantage of this bearish momentum at the breakdown retest of the structure here right into this area. So last week trading session was quite profitable for the gold, as we gathered over 5,000 pips here. And since the beginning of the week, price has been consolidating right within the $1,640 level and the $1,645 area. And from a technical standpoint, when we have such a scenario like this, we want to be waiting, we want to be patient enough to wait for a signal to happen in the form of either a breakout of the structure to send price to the upside, or a breakdown of the structure to send price crashing to the downside. So this is what we have been waiting for since the beginning of the week, and we finally had the breakdown retest of that structure during the early hours of today to signal that bearish momentum. Remember how this $1,640 level has been a major determinant of price action. This has been a demand zone in the past. We can see here, we can see certain pressure here. We saw the breakout, we saw the retest of that structure here, and we saw a consolidation phase right above that structure here as well. So we can say how important that level is. And one thing I'll be saying here is that that level has a tendency for buying pressure, but since we already have a breakdown of that structure and price has continued to trade right below that level, then we want to be holding on to our bearish position on the XAUUSD. So what I'll be advising those who took advantage of this move right here is to lock in your profit, as there is a tendency that price might climb back up, considering that area to be having a memory for buying power. So there is a tendency that price might climb above the 1,645 to go to the upside. There is that tendency, so we can't ignore the possibility of that happening. So what we want to be doing is to lock in our profit, move your stop loss to break even at this point, and let's see if the market will continue to decline to the downside from there. Now, with that being said, for those who had missed out on this opportunity that we took advantage of right below this level, that is the breakdown retest of that structure. For those who missed out on that opportunity, let's see if the market is going to be giving us a second chance. And if we look closely into this current structure, we can see that the $1,635 level has been holding buying pressure in the last couple of hours. We can see rejection here, showing us that buyers are in this market trying to buy here, thinking that this price is cheap enough to buy the gold. So we want to be using that structure as a yardstick for adding more position to our existing trade. So in order to identify that structure here, we will scale down to the 15 minutes time frame. And on the 15 minutes time frame, we begin to see things more clearly. And on the 15 minutes time frame, bringing out our line chart here, we connect that points together, and we should be having somewhere around the $1,736 level as a structure to look out for selling opportunity. So what this simply means, let me label this first. Let me label this. We have $1,736.50, I guess. So we should be having this at the bottom right hand side of our screen. So with that being said, we want to be using, so you can see how we've been having buying pressure from that area since the beginning of this morning. Look at what has been happening here, buying pressure, buying pressure. So what we are going to be doing now, for those who are not in this trade already, remember those who took advantage of this have moved their stop loss to break even to protect their position, as this could turn out to be a reversal pattern in the form of a double bottom structure. That is, if price does not break below the previous structure here to send price to the upside. So what I'm saying here is that we want to wait for price action to take out all the buy position here by breaking down that structure to give us a bearish signal. And remember, we are not getting too excited when we sight that bearish signal on our lower time frame. We want to be patient enough to wait for price action to give us a retest of the structure, after which we sight selling pressure below the $1,736 level on our lower time frame to add more position to our existing trade. And for those who are not in this trade, well, this could be another opportunity to join the wave to the downside. So this is what I'm looking forward to on the XAUUSD. I hope I've made myself clear. I hope I've been able to simulate all the possible scenarios that is likely going to be happening on the XAUUSD for today. So that's been said. Now I want to make mention of the possible situation that could result into a bullish momentum here. Remember, we had this reversal pattern figured out last week. We had this double bottom structure which led into the breakout retest of that $1,640 level to push price to the upside. And right now, price is right back within that area. So this area is not far from that level. So this area could turn out to be a bullish momentum in the nearest future. So I want to also simulate what to do if we have price climb right back up into this channel. So if price climbs back up into this channel and we take out of our sell position in such a way that we have a breakout of the $1,645 level, then I want to be seeing this as a bullish signal. But remember, we are not getting too excited, as we're going to be waiting for price to come back, do a retest of that structure. Then we want to be joining a rally right back into the bearish trend line we identified on the daily time frame at around the $1,665 level and the $1,670 area for take profit target for our buy position if that happens. So let's get ourselves prepared for all the scenarios that will probably come up during the New York session. So that is that on the XAUUSD. If you have any questions whatsoever, feel free to drop in your inquiry in the comment section, and I will be willing to be of help in that regard. Now, moving on, the next pair we are going to be looking at is the EURUSD, and on the EURUSD as well, I have a position running already. And for those who took advantage of that position, well, kudos to you for being on standby to take advantage of the breakdown of the 0.99450 area retest to structure to join that decline to the downside. So if you are in that trade, please move your stop loss to break even at this point while I take you through what is going on the higher time frame. So going to the daily time frame, let's have an holistic perspective of what is really going on in this market. Hold on a second, I'm trying to find my cursor. Oh, my cursor has gone into the second screen, so I'm trying to bring it back. Okay. Not sure what's happening right now. Okay, here we go. So we have the Euro USD on a higher time frame. Let's see what's going on the higher time frame on the Euro USD. So on the daily time frame, when we look at the current structure we have here, we can see that the sellers have taken over this market outrightly. Since the beginning of last year, I think during the later part of last year, we begin to see that bearish momentum, and we were able to connect the series of higher lows here to give us that resultant bearish trend line. In fact, I have two bearish trend line here. I have the major one, which is the thick dark line on your screen, and I have the temporary one, which is the black dotted line on your screen. As you can see, this temporary one has been holding price action since February of this year. And when we zoom into what has been happening since the month of July, we are in a equilibrium situation here. And what do I mean by we are in equilibrium situation? Look at the $1 mark area, very strong psychological level. You can see how this level has been a major determinant of price action since the month of July. Anytime price comes within that level, we can see that participant either buy from that area or sell from that area. Look at what happened here in the month of July. It was a buying pressure from this level, pushing price right to the upside, but the selling pressure below that trend line here was so strong that it sent price back into the demand zone. And though we had this area hold buying pressure in the month of September, and which led into the final breakdown of that $1 mark, and since the month of September, price has been trading right below the $1 mark, respecting that bearish trend line as well, as it continues to trade right below that structure. However, during the course of last week's trading session, we saw a bullish momentum that broke out of the $1 mark area, giving us a clue that buyers are trying as much as possible to take over this market. So we saw the breakout of the key level at the $1 mark as well. We saw the breakout of the bearish trend line. Is this going to be a true breakout or a false breakout? That is the question we are going to be asking for this week. So because of this, we're going to be having a very big question mark here. Is this a true breakout or is this going to be a false breakout? Now, how do we know if it's a false one or a true one? Well, looking at the structure here and going to the beginning of the month, the first thing I was able to do here is to connect the higher lows here to give us that resultant bullish trend line. And as you can see, in the last 3 weeks, 3 to 4 weeks now, price has continued to find higher lows, was unable to find higher highs until the later part of last week's trading session when we saw the breakout of the $1 mark. So now what I want to be looking forward to at this point is to take into consideration of the fact that we have a bullish signal in the meantime. Now that we have a breakout of that structure, from a technical standpoint, we expect that when price breaks out of structure, we expect price to come back and do a retest of that structure to incite a trend continuation to the upside. So we have the situation where we had this impulsive move, breaking out the $1 mark level, and then during the later part of last week trading session, we begin to see selling momentum, which at this point in time could be seen as a retracement of that impulse leg. And when we have a retracement of that impulse leg, we don't know how far this retracement phase is going to go. So the only way we can project something to play around with is to use our Fibonacci retracement tool to identify a golden zone area right within the 50 and the 78.6% of that leg to look out for buying opportunity. So we want to see that, okay, this retracement phase come into somewhere around here, and look out for buying opportunity here to join the trend continuation. So what this simply means is that we continue to join the sell momentum right into this level where we want to see how price is going to be relating to the bullish trend line here or the bearish trend line around this area. Very sensitive confluence to look out for buying opportunity. And if we see a breakdown of that structure retest, then we want to be seeing that as a trend continuation to the downside. Now, in order to understand this current structure a little bit better, we want to see how participants in this market is currently relating to the structure to be able to take advantage of any trading opportunity for this week. So we will have to scale down to a much lower time frame, like the 1 hour time frame, where we want to see how participants in this market is relating to the structure. So price is still trading right below the $1 mark. Remember that. And one thing we observed since the beginning of the week is that price has been caught within a flat channel, right within the 0.99450 level and the 0.996500 level. So we can see since the beginning of the week, we have a consolidation phase, hereby emphasizing the indecision in this market right now. So what we want to be looking forward to take advantage of any trading opportunity here is a breakout or a breakdown of this channel. So it could either be a breakout to the upside, that is price breaks out, but remember, we are not getting too excited. We wait for a retest to structure to join the rally to the upside, or we could be having a breakdown of the structure where a retest to structure will be sending price crashing to the downside. And the breakdown is what has happened since the beginning of the week. So we saw the breakdown of the 0.99450 level, which incited that bearish signal that we took advantage of, and price has continued to trade to the downside. So like I said earlier, move your stop loss to break even at this point, as we want to see how price action is going to be relating to the structure. Are we going to be having a situation where price will continue to trade right below the 0.994500 level, or are we going to be having a situation where price will break out, turning this breakdown to be a false one, break out of the 0.99650 to send price going to the upside? So this is what we are going to be looking out for today. So what I'll be advising us to do here, move your stop loss to break even. And for those who missed out on this opportunity here, let's see if the market is going to be presenting us with a second chance to join this decline. So in order to do that, we have a structure right around the 0.99200 area, which I will be lining out for us here. So we have a structure around here that is the 0.99200 level, 0.99200. So let's get that figured out yet. So what we're going to be looking forward to during the New York session today is that we want to know if this bearish momentum is strong, and if it is strong, we want to see an engulfing candle taking price right below the 0.99200 level, taking out all the buy position here to give us that bearish signal. Remember, we are not getting too excited. We want to wait for price to give us further confirmation, which is likely going to come in the form of a retest of the structure, after which selling pressures right below this level on lower time frame will confirm an opportunity to add more position to our existing trade on the EURUSD. Now, with that being said, I want to make it clear here that remember that we are within a buy zone that we identified on the daily time frame. Remember, we had this impulsive move that broke out of the $1 mark during the course of last week's trading session. This move, let me show you. Let me give you a visual representation of what I'm talking about. So we had this impulsive move that broke out of the $1 mark, and I want to be seeing this as a retracement of that impulse leg, and we don't know how far this impulse leg is going to go. So what I'll be saying here is that as soon as price continue to move to the downside here, we continue to adjust our stop loss, moving our stop loss closer to lock in our profit, as we don't know when the reversal pattern is going to emerge here to push price to incite the second wave of that bullish momentum that started last week. So that is the scenario we are looking forward to on the Euro USD. If you have any question whatsoever, feel free to drop in your questions in the comment section of this video. Well, I think this is going to be the last pair I'm going to be talking about for today, as I'm already out of time. But before I call it a day, let's quickly run through what we have talked about so far, especially for those who had missed out from the early minutes of the session. So let's quickly run through and see what we've been expecting since the beginning of the session. So the first pair we looked at today was the US oil, and on the US oil, we already saw our price has started the week on the bearish tone, as we saw the breakdown of the $87 mark, and price is currently around the very important key level that was broken during the course of last week's trading session. And from a technical standpoint, whenever we have a breakout of a very important structure like this, we expect that price is likely going to come back to do a retest of structure, followed by buying pressure on lower time frame to join the second wave of that bullish momentum. So during the New York session today, we want to be very mindful of this, I want to be looking out for trading opportunities here. Want to see how participants in this market is going to relate to the structure. If we are going to be seeing buying pressure from here on lower time frame, then a breakout retest on lower time frame will confirm that we should be joining the bullish momentum. However, if a breakdown of the $86 level happens, a retest of structure happens, we continue to remain patient and see how price is going to relate with the $85 mark here. And remember, we are still within that demand zone, within the buy zone we identified here. So we'll be looking out for buying pressure around this area, breakout retest to join the rally to the upside. And for those who took advantage of this counter trend opportunity at the breakdown retest of the $87 mark, like I told you, move your stop loss to break even, and let's see how price is going to be relating to the structure. And if we have a breakdown retest of this level, you will be adding more position to your existing trade. But for me, looking at it from a long-term perspective, I will be looking forward to buying the US oil. So I will continue to remain patient and look out for buying pressure around this area to take advantage of the second wave. Now we moved on to the Euro USD, where I told you how I took advantage of this bearish momentum here after the breakdown retest of the 0.99450 level. And I have told you to move your stop loss to break even to protect your position at this point. And for those who missed out on the opportunity we took advantage of here, I've advised that we remain patient and see if the price is going to break down the 0.99200 level. So if we have a breakdown of the structure, retest of structure followed by sudden pressure on lower time frame should confirm an opportunity to join the decline. And remember, we are within the buy zone. And one thing I said here is that as soon as price move in our direction, please move your stop loss accordingly to protect your position, as we don't know when that reversal pattern that will incite the second wave of the bullish momentum happen. So let's continue to hold on to our sell position by moving our stop loss accordingly. However, I also stated here that if at any point in time we see a situation where price breaks out of the 0.99650 level, that is, price does not go below the 0.99200, then we want to be seen as a bullish signal. Remember, we are not getting too excited. We want to wait for further confirmation in the form of a retest of structure before we want to be joining the rally to the upside. And if a rally to the upside happens and leads to the breakout of the $1 mark, a retest of that structure also will welcome an addition to our existing trade. So that is that on the Euro USD. Then we moved on to the GBP USD, where I also told you I took advantage of a bearish momentum here. And for those who took advantage of that move, I was able to congratulate you guys, and also told you to move your stop loss to break even to lock in some profit at this point. So at the beginning of the week, we saw our price has been consolidating between the 1.161500 level and the 1.15800 area before we saw this breakdown of the 1.15800 area. So there are two scenarios we want to be looking forward to during the New York session. The first one is price coming back to do a retest of the structure, followed by selling pressure on lower time frame to join the decline to the downside, after which a retest of the structure again could welcome addition to our existing trade. And for those who missed out on this opportunity here, that is the breakdown of the 1.15800 area, well, let's see if the market will give us a second chance at a breakdown retest of the 1.15500 level. And remember, when we have a breakdown of the structure, remember, we are not getting too excited. We want to remain patient and wait for price action to give us further confirmation in the form of a retest of the structure to join the decline to the downside. Then we went on to talk about the XAUUSD, which is the gold medal. And I told you how we took advantage of a bearish momentum here. And with the look of things, we moved our stop loss to break even, and it appears we've been taken out of our existing position. But that is not frightening anyway. What we want to be looking at right now is to place your stop loss right below the 1000, place your sell stop right below the $1,640 level, as if price continues to go to the downside, we are good to go. As long as price remain below the $1,640 level, we want to remain in a sell position on the XAU USD. And if we have a further breakdown of the $1,736 level, retest of structure to welcome an addition to our existing trade. Now, there is a caveat to this trade that I've just showed you here. And remember, we have the $1,640 level, which has been a strong demand niche for participants in this market in the past. Remember, we took advantage of this move from here last week. And if price continues to the upside in such a way that we have a breakout of the $1,645 level, then I want to be seeing this as a bullish signal. And remember, we are not getting too excited. We wait for price to give us a retest of structure, buying pressure on lower time frame, then we could join the rally to the upside with our take profit target sitting right within the $1,665 level and the $1,670 area. So that is that on the XAUUSD. So I advise you to be on standby to take advantage of that momentum. So right now we have been taken out of the sell position we took advantage of this morning. So like I said, set your sell stop again right below the $1,640 level, and let's see how far price is going to take us on that one. Then we went on to close the day with the USDJPY, which is a pair that we took advantage of at the beginning of this morning. And I told you that I'm already in profit on this one, as we saw our price was initially caught within the channel since the beginning of the week before we witnessed the breakout retest of the structure, which also lines up with our bullish trend line, and boom, we took advantage of this move. And currently we're running with about 80 pips in profits at this point. And the next thing I said is move your stop loss to break even or lock in some profit somewhere right below the 148.250 Japanese yen level. So for those who missed out on the opportunity here, that is the breakout retest of the 1.147.800 area, well, we have identified a structure at the 148.250, which has been a structure that held sell pressure at one point in time before we witnessed the breakout of that structure here. So like I said, we wait for price to come back, do a retest of that structure, followed by buying pressure on lower time frame, then we could join the rally to the upside. And if you look at how sensitive the 148.250 level is, it also lines up with the bullish trend line that we were able to identify. So going into the New York session today, we have two parameters to guide our action for trading opportunities on the USDJPY. The first one is the 148.250 level, and the second one is this bullish trend line. So as long as price continue to trade right above this bullish trend line, right above this 148.250 level, we continue to look for buying opportunity. But if price breaks down that level, then that could signal a momentum shift at that point in time. So that is that on the USDJPY, and at this point I want to call it a day. So like I said, Mondays are always very slow. Let us be very mindful of that, and don't let us give in to our compulsion, as there is a tendency for you to want to take a trade. By all means, wait for your structures to line up. And like I always say, whenever we have a breakout of a structure, which is a signal of where price is going, we don't want to get too excited. We want to remain patient and wait for price action to give us further confirmation, which is likely going to come in the form of a retest of that structure before we want to be joining the direction of the prior within price action. And if a retest of structure does not happen, that is, market is not giving us a second chance to join the rally or decline, let's pass the trade. There are quite a lot of opportunities in the financial market that we could take advantage of. So on this note, I want to wish you best of luck today, and I hope to see you tomorrow, same place, Extreme Speed Live, same time, 10 a.m. UTC, 11 a.m. West African time, same place as usual, and let's come together again to analyze the financial market together and get prepared for the New York session for tomorrow. So on this note, I wish you a wonderful day. Bye bye.